All right, everybody. So we're getting ready to go live here. Just a few moments. Wanted to get started here in a second. I'm gonna go ahead and share my screen with you as well. Let me. There we go. Make sure you guys can see my screen. All right. So today what we're going to talk about is we're going to share the quickest way to find profitable wholesale deals. So what we're going to do is I'm going to go through and break down essentially the steps for you if you're a new investor that is completely new, that's wanting to kind of get started and kind of want to learn the steps, or if you're an experienced investor looking to kind of take things to the next level. I've broken down some slides to talk about exactly what the best path is to find quick deals in today's market. So there's a lot of talk out there about a recession, what's going to happen to the real estate market. Well, things probably aren't going to change all that much if you follow the strategies that we're going to talk about today. So for those of you that are with us live, I want to make sure that you guys can hear me okay. Make sure you guys post in the Facebook group if you can hear me. And what we'll do is I'm going to have you guys go ahead and comment. As we go through, I will kind of just ask some questions, make sure that we're all, able to kind of hear us, that we're on the same page with everything. So first thing I want to do is, again, like I said, just introduce yourself. Let me know where you're watching this from, if you're watching the live or the replay. That way we can kind of make sure that we've got some people joining us. Second thing I want to know is if you're a new investor or if you're an experienced investor. And that way I can kind of know who I'm talking to, who's on the live, what kind of questions we're going to get, and that kind of stuff like that. So make sure that you guys drop some comments below. And let me go ahead and get my screen again. Okay. So let's jump in. Let's talk about the quickest way to find profitable wholesale deals. So what we're going to cover today, real simple, is we're going to talk about how to find motivated sellers as fast as possible. That way you can get started with this right away. This is so important for you if you're completely new and you're looking to do a deal quickly. Finding motivated sellers and some of the best ways and the quickest ways to do that is really going to be important. Second thing is we're going to go through the steps on how to get a property under contract in the simplest way that's going to provide you with accepted contracts. So that way you're not going to have a lot of friction or a lot of issues with your deal. And then we're also going to talk about step-by-step ways to find buyers for your wholesale properties. So this is going to be super important because a lot of people struggle with finding buyers for their deals. A lot of times it's because their deals aren't really that good a deal. So I'll make sure we talk about today kind of what that is going to look like, and I'll share with you guys a bunch of other tips and tricks that you guys can use as well. So what I want to do is, again, just have you guys comment. Let me know who's watching us, if you're watching us live, or if you're catching this as a replay. Let me know if you're a new investor. I just want to kind of get a feel for kind of who we're talking to today. All right. So let's talk about the quickest way. So here's the thing. Everybody wants to have the quickest way to do their first deal. They want to implement as many shortcuts as you possibly can. We want to find the sellers that are going to be the most motivated. That way we don't have to talk to as many people. And we want to find the right buyers to make sure that we know we're going to be able to sell our properties. And we want to be able to make sure that we're getting our offers accepted. So to do that the quickest way, one of the things that we want to make sure that we're doing is that we're not making typical mistakes that a lot of new investors make. So one of the things that I see so many investors struggle with is that they jump around from strategy to strategy. This can be with your marketing. This can be with the type of wholesale deals you're doing, whether you're trying to do creative financing subject to or traditional wholesaling. Typically, they just try to do as many things as possible, as quickly as possible to get that first deal. And a lot of times you're just jumping around. You're not giving enough time to what you should be doing. So For example, if you're starting out and you're doing text messaging or cold calling or direct mail, a lot of times they might do a very small amount of marketing. If they don't see results, they're going to move on to a completely different strategy. And that's going to be one of the biggest mistakes that we see. So giving up too quickly, that kind of leads us right into kind of that next little step. And this is so important for our new investors is because, look, if you don't get that proof of concept, if you don't see that something's working right away, a lot of people give up too quickly, and they might just be on the brink of finally finding success. So we want to make sure that you're not giving up too quickly. So if you guys are live with me or watching the replay, make sure you type in "don't give up too quickly." And the reason why we want to do that, again, is just remind yourself, look, this is going to be something that we can try to speed the process up, help you do that first deal as quickly as possible, because I know that's what your goal is. But this is not something that's going to happen overnight. Typically, for a new investor, you may have to talk to a significant amount of people before we find someone that's willing to sell. Once we find someone that's willing to sell, it may take us talking to a lot of those types of people that are willing to sell, to find someone that really needs to sell, someone that's willing to take a lowball offer. So these are all things that we really need to make sure that we're taking into account. Because if we're rushing things and we're trying to do deals too quickly, a lot of times we may do things that are going to hold ourselves back. So I want to make sure that that's something that we're not kind of running into. All right, so let's talk about these steps. So we talked a little bit earlier about we're going to go through, we're going to find our buyers for properties. We're going to identify how to find motivated sellers that really need to sell, how to structure deals, get your offers accepted without having any issues. So we're going to run through those steps. I've broken them down into, I believe, 5 steps. Yes. So we're going to cover 5 steps, show you kind of what that looks like. So that way you know exactly how to get started to get your first deal as quickly as possible. So let's go ahead and talk about the first step. So the first step is really identifying the right buyers. Now, this is going to be key, because what most people teach you is that it's really all about marketing first. Now, one thing that you have to kind of keep in mind is that if you're going out and you're marketing and trying to find properties before you've identified who's buying in your area and what they're buying, a lot of times you're going to be out there blindly marketing. So most people are going to tell you, if you're new to the business, pick an area that you want to get started in, throw some marketing out there to kind of see what sticks. Once you've, kind of picked an area and you started doing some marketing, find a couple people that are looking to sell, make them some low ball offers, try to get that property under contract, and then start shopping around for a buyer. Now, if we take that approach, what happens is that's going to open us up to really a lot of guesswork. We're not going to know what area to find properties in. We're not going to know what kinds of properties to look for. We're not going to know if our offer is right, if we're going to be able to find a buyer. So the steps that we like to take is identifying the buyers first. Now, this is going to be the most important aspect, because if we can identify our buyers up front, we know that we're going to be able to look at specifically where these buyers are buying, what they're buying, and use that as the criteria to help us identify the properties. It's going to allow us to really identify the demand in our area, okay? All right, so identifying buyers. So the key to this is we want to identify the right buyers. Now, so many people get caught up in building a large buyers list to where they're going out, they're looking on Craigslist, they're going out to their local real estate association meetings, they're going out and jumping on any email list that they can get on to try to add people in as their buyers. That's one of the biggest mistakes I've seen so many new investors make, is they think they have to have this big buyers list. They want to have everybody on there. That way it's going to give them the best chance possible to sell their properties. Well, I prefer to take a different approach. I prefer to take the approach of identifying the right buyers, working with a very small group of maybe 5 to 10 buyers on a repeat basis, and not worrying about trying to build a large buyers list, promoting my properties out. What I like to do is pull a list of every buyer transaction in our area. So to do that, what we want to look at is we want to find every single absentee owned transaction in the last maybe 30 to 60 or 90 days. You can go a little bit further out if you're in a small market where there's not a lot of buyers. But if there's a lot of buyers, a lot of transactions in your area, we want to stick to maybe 30 to 60 days. Now, we can use PropStream to do this. So for any of you guys that don't know how to find these buyers, make sure you drop a comment below. I'll send you over some videos and some information on how you can go find these buyers. But typically PropStream is going to be the tool that I like to use. So I'll link PropStream below as well. but we want to identify who's buying investor bought property. So that's what absentee owned means. They own the property, but they don't live in it. So that's the first thing we want to identify. We want to pull all those buyers. Now, the second thing is we want to identify just buyers that bought multiple properties during that time frame. Now, the reason why we want to do that is because those are going to be what we call our pro buyers. Those are the people that are buying properties consistently. And those are going to be the buyers that we know that if we find a property that's a fit for what they want, they're going to be willing to buy that property again. So that's the reason why we want to find those multiple buyers. We call those our pro buyers. Okay, so if I reference that term, that's what I'm talking about. The next thing is out of those buyers, we want to be able to look at what properties they bought and how much they paid for those properties, and how does that compare to what the retail price is. So this is going to help us identify the buyers in our market that are paying the most for properties. This is going to be typically landlord buyers, not typically going to be investor buyers. But the reason why we want to do that is because we're going to be able to make stronger offers to get our offers accepted if we're selling to buyers that are willing to pay us more. We don't have to try to make offers at 50 cents, 60 cents, 40 cents on the dollar. We can identify the buyers that are paying a lot closer to retail. All right. So that's really, really, really important for us. So that is step one, is we want to identify the right buyers. Now, the next thing we want to do is we want to identify the demand. And this is our second part to our buyers. We want to look back at what those pro buyers are. So if we've identified anybody that bought in the last 30, 60, 90 days, anybody that bought multiple properties, and anybody that is paying at or above retail or close to retail, we want to narrow that big list down to just 5 to 10 to 15 people. Those are going to be our serious pro buyers. We can look back at the last 15, 25, 30 properties they bought. We can see what neighborhoods they bought in, what zip codes. We can see the types of properties. So whether it's a 3-bedroom, 2-bathroom property, or all of the details, everything is going to be identified for us. So we're going to be able to see what their buying criteria is. Okay. So that's going to give us our demand. All right. Excuse me. So once we identify our demand, that is going to tell us exactly what kinds of properties that our market is looking for. So what are the zip codes they're buying in? What are the neighborhoods they're buying in? What is that buying criteria? We're going to see that based on what they've already bought. So instead of just guessing, we're going to be able to identify and use that to find the right kinds of properties. So it's all about identifying our market demand. So normally people just kind of shoot in the dark when it comes to kind of identifying where they want to do their marketing. But this gives us a much smaller target to hit, which is really important for us whenever we're looking at identifying our first couple of properties as quickly as possible. We want to try to give ourselves the best chance that we possibly can to be able to identify those properties. So that's really going to be the most important thing. Okay. So step 3, this is where we want to target the right list of people who are going to be motivated sellers. All right. So this is really going to be key. Instead of targeting this huge, large area for motivated sellers, we've now narrowed it down to a very small pool of areas that we're going to target. We've already determined who our buyers are. We determined who the buyers are that we want to work with. So the buyers that are buying properties consistently, the buyers that are, essentially paying the most in our market. And we can see what their history of buying is. And we're going to use that as our initial area. So that's the first step, is targeting a very small area of buyers. Now we want to target the right kinds of properties. So we can look back at what they bought. What types of properties? 3-bedroom, 2-bathroom, 3-bedroom, 1-bathroom, like what, single family, multifamily. What does that buy box look like? That's the next thing we want to narrow that list down by. All right. Now, again, this is something we can use PropStream for, but most people, if you're just out finding properties on Zillow, or if you're out there posting on Craigslist or hanging bandit signs, you're not going to be able to target like we want to be able to target. So it's really important to make sure that we are identifying the people that have the properties that are a fit for what our buyers want. Okay. Now, the next thing is we want to be able to identify the sellers that are going to be the most motivated. Okay. So this is another step that a lot of people skip over. A lot of people will market to everyone. Okay. So you get a bandit sign, you get a business card, you get a flyer, you just post these things out there. A lot of people think the wider I cast my net, the better it's going to be for me. Now, that's fine. You can definitely do that. But if we're trying to identify the quickest way to do our first deal, we want to make sure that we're just targeting the people that have a property that's a fit for what we want. and they show signs of motivation. So when we talk about motivation, what does that mean? So in this business, we really can't do a lot with people that want to sell their home. We really only can help people that need to sell. So that's what we want to identify, is people that have the highest level of motivation, who needs to sell their property. So in circumstances, PropStream is a great tool for us to be able to look at motivation. So if you're new and you don't know what PropStream is, don't worry, I can share some free resources. Make sure you just drop a comment below, just drop PropStream, and I'll reach out to you to share some information with you about how to use that. But with PropStream, we can target things like if they're an absentee owner, we can target if they are going through bankruptcy, if they're going through foreclosure, if the property's vacant, if they're behind on their taxes. These are all things that we can target with a tool like PropStream. So a lot of times what we want to do is, if we're trying to identify the people that are going to be the most motivated, we want to do what's called a stacked list or a layered list. So the best way to look at that is to find people that have 2 or more levels of motivation. So one of the things that we want to look at is going to be really simple. A stacked list would be maybe someone that has a vacant property, but in addition to the property being vacant, maybe they're also going through a foreclosure. They're in the pre-foreclosure process, okay? So that is going to be one of the most important things that we want to look at, is if we're trying to do a deal quickly, let's find the people that have the highest level of motivation. So make sure you drop a comment if you're watching this and you understand stacked lists or layered lists is going to be where it's at. We want to find the people that have the highest level of motivation, okay? So that's going to help us find our first deal as quickly as possible. All right, the next step is going to be starting our marketing. Now, this can be 100 Facebook Lives about marketing, okay? We can talk about what's the best strategy for you. We can talk about all the different strategies, whether it's inbound marketing, outbound marketing, primary marketing strategies, secondary marketing strategies. Look, there's a million different things to kind of consider. We're just going to talk about some of the marketing strategies that are going to help you benefit the quickest way possible, okay? That's really what we're talking about today, is how to do your first deal as quickly as possible. So the first thing we would need to consider when it comes to marketing is that you need to be consistent, okay? The biggest mistake that I see new investors make when it comes to marketing is that they're very inconsistent. They're just doing a deal here. Doing some marketing here. Next week, they'll do a little bit more marketing. Maybe they talk to 5, 10, 15 people a week. It's very difficult to do deals and do deals consistently or quickly if you're doing a very small amount of marketing. We need to make sure that you're doing your marketing consistently, okay? Second thing is we need to make sure that we're choosing the right strategies for our budget, okay? So when it comes to marketing, and we're going to talk about this, it's all about the conversations. We need to talk to as many people as possible. So when we look at marketing strategies, we need to choose strategies that's going to give us the most amount of conversations for our budget, okay? So I'll send some resources. If you guys have struggles with marketing, drop a comment below. I'll send you guys a link to where you can check out my ebook where I talk about marketing strategies and stuff like that. But it's really all about choosing the right marketing strategy that's going to give you the most amount of conversations. And I'll give you a really quick example, okay? So let's say that you've got a $500 per month marketing budget. If you were to spend that $500 a month on direct mail, okay? Direct mail has a very low response rate. So for every, 100 pieces of direct mail that you send out, you might get 1 response, okay? It's very low, 0.5%, if that, when it comes to that. Whereas if you were to do maybe text message marketing or cold calling marketing, there's a much better response rate with those strategies. So let's say, for example, with texting, we may get a hold of 25 to 35% of those people versus 0.5%. So it's giving us more conversations. Now, every marketing strategy has a time and a place. I'm not saying that texting is better than cold calling. They all have a process and a plan on when we want to use them. So it's really all about choosing the right marketing strategy that's going to benefit you for your budget. So with texting, you're going to have more conversations than you would with direct mail, okay? So that's what we want to kind of consider, is choosing the right marketing strategies that are going to work best for your budget, okay? The next thing is going to be, you need to set a goal for conversations for the day. So let's say that you want to have 10 conversations a day. You need to do everything in your power to make sure that you have a minimum of 10 conversations. Now, I'm not saying that that's the sweet spot or that's the goal. Everybody's going to have a different goal depending upon what strategy you're using. There's just a lot of things that go into it, but set a goal for yourself see how it's working. In 2 weeks, if talking to 10 people a day isn't enough, bump it up to 15, bump it up to 20. Like I said, everything's going to be different. There's no magic number on how many people that you need to talk to. Okay. But you need to be consistent. You need to choose the right marketing strategies for your budget. If you have questions about that, I can send you some more resources. It's all about having quality conversations with motivated sellers. Okay. So set a goal for yourself for the day and have those conversations. So make sure you guys drop a comment below if you like that. Quality conversations. I want to make sure that you guys are, getting the most out of this possible. So we're about 20 minutes into the live right now. We've covered a lot of really good information. So make sure you guys are commenting. Let me know how you guys like it. Let me know if you guys are getting a lot out of this. I want to make sure that we're getting as many comments as we possibly can. That way more people are going to be able to see this. Okay. So let's talk about the fifth step. So the fifth step is going to be making offers that get accepted. All right. So this is going to be key. We have to make sure that all of these things align up. We've got the right buyers. We know what those buyers are looking for. We know what the market demand is. We go out. We then narrow our list of our list of sellers down to, just our target sellers. From there, we're using the right marketing strategies that's going to give us our best chance to do our first deal as quickly as possible. And then from there, we want to make offers that are going to be accepted. So I'm going to talk about what we can do to get your offers accepted the quickest way possible. Okay. So when it comes to getting your offers accepted, one of the most common things that we see is a formula called MAO, or maximum allowable offer. This is taught by a lot of people. The reason why it's taught is because it's a very simple strategy that someone can share with you that you can repeat over and over and over again. It's really just for simplicity purposes. And what MAO, or maximum allowable offer is, ultimately it is using a formula to decide what your offer is going to be. So for example, typically your maximum allowable offer would be 70% of what the after repair value is, or what it would sell for when it's all fixed up, minus repairs. So let's say, for example, we have a property that would sell for $100,000, just to use simple terms. Okay. If we're using the MAO formula to formulate our offer, what we would do is we would make an offer at 70 cents of the dollar, or at 70,000 minus repairs. So let's say it needs $10,000 in repairs. So if we use the MAO formula on a $100,000 property that needed $10,000 in repairs, our offer would be $60,000. Okay. So things that you need to consider when it comes to MAO is that there's a lot of flaws. Okay. The biggest flaw is that you can never use a formula in all markets and in all situations. Okay. What I mean by that is, if you're making offers at 60 cents, 70 cents on the dollar in a market to where you're dealing with $50,000 properties versus $100,000 properties, your numbers are going to be way off, let alone the common market where it's $200,000 to $300,000. If you're using the same formula, your offers are either going to be way too high, way too low. So that means you're either going to get a lot of offers rejected, or you're going to leave a lot of money on the table. So I personally don't use MAO. I never have used MAO formula. And the big reason is because, again, you're either going to lose out on a lot of your deals, which that's not what we want. We don't want to be making lowball offers that are getting rejected, but we also don't want to be making offers that are too high that we're not making enough money on our deal. So the MAO formula, while it can be used in some markets, I highly do not recommend it. What I like to do is use data. Okay. So we've already gone through and done the hard work of identifying our buyers. We already know who our buyers are, what our buyers are buying, and most importantly, we can see what they paid for properties. So if we can look at our 5 to 10 buyers that we know we want to work with, we can see the last 25 or 30 properties they bought and what they paid. We can create our own MAO formula based on our buyers and our data. So that way we can formulate our offers to make sure that we're going to get our offers accepted, but also know that we can sell to our buyers at or below what they've already paid for other properties. So it's really important to make sure that we're using our own information and data to make our offers. So for example, if you're going out and you're putting properties under contract, but you're having a hard time getting your buyers to buy the property, well, two things are likely happening. Number one, you're dealing with the wrong buyers, or number two, your offers are just not good enough to where your buyers aren't willing to pay for that at this particular price. So that could be an issue of how you're formulating your offer. So if we've already identified who we want to try to sell to, who the big buyers are in our market, we can look back at what they've bought and we can use that as a really simple guideline of our market and our demand to be underneath that. So that's really what we want to do when it comes to getting our offers accepted. Now, a lot of times what this does for us is if we have buyers that are willing to pay more, then we're going to be able to make higher offers that are going to more than likely get accepted than someone that's using Mayo. Because if we're selling to the buyers that are paying kind of top of the dollar, whether it's hedge fund buyers or any of these people, we can make a stronger offer to get that offer accepted. So there's going to be a lot less friction with those sellers. But if we still can get a really good offer accepted, then we're going to be able to make more money by selling it to our buyer because there's a bigger spread there because we've got the right buyers. So I hope that makes sense. Like I said, there's a lot of ways that you can formulate your offer. I personally don't like using Mayo just because, again, you can't use the same formula on every single property. Your buyers are going to be different. The property is going to be different. If it's a property that needs a full rehab and you can't sell it to a rental, someone that's going to buy it, fix it up, and keep it as a rental, and you have to sell it to a rehabber, your offer is going to have to be different. So we can't use the same formula for a lot of that kind of stuff. So what I teach my students is how to make your own offers based on the buyer's data that we have and what they're actually paying for properties. Okay. So let's recap kind of what we talked about so far today. And again, drop some comments below. Let me know if you guys like this information, if you guys want me to share more information like this. But again, it's all about identifying who we want to work with, who we want to sell our properties to. Look at what their demand is. What are they currently buying? If we find properties that fit within that, if we sell to them, what kind of properties are they looking for? Are they looking for specific areas, specific types of properties, specific styles of properties, bedrooms, bathrooms, square footage, that kind of stuff? What is our market demanding? Go out, use that as our initial criteria to narrow down the types of properties to look for. Identify specifically from there, once we identify what types of properties to look for, who are the most motivated sellers that we can target. So finding the people that are the most motivated. From there, marketing to them using the best strategies that we have that fit within our budget. And then from there, once we identify those people who are willing to sell or need to sell, use the data that we have to make an offer that's most likely willing to get accepted. So hopefully you guys enjoyed this information. I hope that this is something that kind of opens your eyes to a different style or different strategy of investing versus kind of what most people teach, where it's kind of that shotgun approach where you're just going out, you're picking an area that's close to you, throwing a bunch of marketing out there to kind of see what sticks. Once you find someone that wants to sell, use Mayo or some low ball offer to get them under contract, and then start finding a buyer, hoping you're going to be able to find a good buyer. With this strategy, what I teach you, it's going to make the process so much easier for you. And it's going to allow you to do deals at a much quicker pace than if you were just using a traditional kind of strategy like a lot of people teach. So again, leave some comments. Let me know what you guys think about this video. I'll be making new videos for you pretty regularly. This particular Facebook Live, I'm going to try to host every single week on Wednesdays at 11 o'clock. So make sure that you guys join. I will get the replay out for those of you. Now, for those of you that are looking for more help or that you want some information beyond what I've talked today about the strategy that we talked about, so if you're looking for one-on-one help, you want me to kind of implement, helping you pull your buyers list, helping you figure out the demand in your area, helping you choose what marketing strategies are going to work best for you, or help finding the right motivated sellers in your area, or even formulating your offers. I do work one-on-one with students. So if you drop a comment below, just let me know help in the comments. I'll reach out directly to you and we can talk a little bit about kind of what it's like to work with me, what we can do for you. I do work with a small handful of students right now, and I will give you my full blueprint as far as kind of everything that I'm doing in my own business as well. So that way you guys know exactly how I can work with you. Just drop a comment, help below, and I'll reach out and talk about how we can work together one-on-one. So again, thank you so much for joining me for the Facebook Live. I will get the replay out. And again, I'm going to try to start hosting these on a weekly basis. So hopefully you guys enjoyed it. Drop some comments, drop some likes, let me know. And I look forward to talking to you guys all soon. Thanks.